As a seasoned crypto analyst with years of experience navigating the volatile waters of the cryptocurrency market, it's imperative to delve into the current landscape with a discerning eye. The recent surge in interest surrounding exchange-traded funds, ETFs, within the cryptosphere has prompted both excitement and caution among investors. In this discourse, we'll dissect the multifaceted dynamics at play, from the long-term bullish outlook to the regulatory intricacies shaping the future of digital assets. First and foremost, let's address the elephant in the room: the bullish projections for cryptocurrencies, particularly Bitcoin. Renowned figures in the industry, such as Raoul Pal and Arthur Hayes, have painted a rosy picture of Bitcoin's trajectory, with estimations ranging from $200,000 to a staggering $1 million by 2025. These forecasts hinge on a confluence of factors, including heightened institutional adoption and the looming specter of macroeconomic instability. It's essential for investors to internalize these predictions while exercising caution, as market dynamics are subject to rapid evolution. Moreover, the emergence of chains like Solana underscores the vibrant ecosystem fostering innovation within the crypto space. Solana's embrace of meme coins and tokenized culture has galvanized developers and users alike, bolstering the utility and value proposition of these nascent platforms. This trend signals a broader shift towards decentralized finance, DeFi, and Web3 applications, underpinned by robust blockchain infrastructures. However, amidst the euphoria lies a stark reality: the inherent risks and volatility inherent to cryptocurrencies. While ETFs offer a convenient entry point for institutional investors, they also exacerbate market fluctuations, amplifying both gains and losses. As institutional capital pours into the market via ETFs, diligent monitoring of regulatory developments and market sentiment becomes paramount. After all, the regulatory landscape remains fraught with uncertainty, with ongoing investigations into Ethereum's legal status and the potential ramifications for ETF approvals. Speaking of ETFs, their advent marks a seminal moment in bridging the gap between traditional finance and the crypto realm. These investment vehicles serve as a conduit for mainstream adoption, enticing a broader swath of investors seeking exposure to digital assets. The influx of institutional money facilitated by ETFs augurs well for liquidity and price discovery, laying the groundwork for sustained growth in the long term. Nevertheless, regulatory hurdles loom large on the horizon, casting a pall over the industry's prospects. Gary Gensler's stewardship of the Securities and Exchange Commission, SEC, carries significant weight, with his stance on cryptocurrencies shaping regulatory policies. While the approval of Bitcoin ETFs represents a watershed moment, the path forward remains fraught with obstacles, particularly for Ethereum-based ETFs grappling with regulatory ambiguity. In the midst of regulatory flux, the tantalizing prospect of Ethereum ETF approval looms large. Despite the regulatory scrutiny and lingering uncertainty surrounding Ethereum's classification as a security, industry titans like BlackRock remain bullish on the prospects of spot Ether ETFs. The potential green light for Ethereum ETFs could unleash a torrent of institutional capital into the market, further bolstering Ethereum's standing as a foundational pillar of the crypto ecosystem. Moreover, the advent of ETFs heralds a seismic shift in the traditional financial landscape, offering a lifeline for investors grappling with negative real yields on government bonds. ETFs provide a conduit for diversification, enabling clients to gain exposure to cryptocurrencies without navigating the complexities of direct ownership. This symbiotic relationship between traditional finance and the cryptosphere underscores the growing mainstream acceptance of digital assets as a legitimate asset class. As of April 3rd, the combined Bitcoin holdings of new spot Bitcoin ETFs amounted to a staggering 57,472.8 Bitcoins, valued at over $33 billion. This constitutes approximately 4.24% of the total Bitcoin in circulation, underscoring the monumental impact of ETFs on the cryptocurrency market. Notably, BlackRock's IBIT stands as the second largest holder of Bitcoin, trailing only behind Grayscale's Bitcoin Trust, GBTC. In retrospect, the historic approval of 11 spot Bitcoin ETFs by the SEC caught many off guard, signaling a paradigm shift in regulatory attitudes towards cryptocurrencies. The newfound legitimacy afforded to ETFs has catalyzed a groundswell of interest from institutional investors, propelling Bitcoin into the mainstream consciousness. Yet, the journey ahead remains fraught with regulatory uncertainties and market volatility, underscoring the need for vigilance and prudence in navigating the tumultuous waters of the crypto market. Please go ahead by liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.